Hello guys, this is the 4x um, plus strategy demonstrating it, and in this video I'm going to be giving you a little bit of insight into some things in price. And for some beginners who have been sending me messages and saying they don't understand basic price action and stuff, just hang on because there is something in here for you. All right, so you see my lines drawn out pretty clean. So most of the things here are already taught in the 4S training. All right, this level you're seeing where price has come to is a key level on a higher time frame. Okay, this is a key level on a higher time frame, and what makes that a key level is that the market has essentially as you know has actually made a gap and in the marketplace, and it came back to fill it up. And in the process of doing that, the market are taking out liquidity up above here. I told you when the price is moving, there are basically two things that it is looking for. So it is traveling up, it is looking for basically two things. Number one, it is going to fill the gaps in the marketplace. And if you may not understand what that means, but if you have the 4S training, you should be able to understand what I mean by the gaps. So it is going to fill up the gaps in the marketplace, and then number two, it is going to take the other side liquidity, so to balance up the market. Okay, so those are the two things that basically makes price to move, and those are the things that price is always moving for. You see price always constantly moving, and those are the things that it is looking for. Okay, so we see price trading, we see higher prices coming up and into traded into the liquidity sitting above there. Because think about it, guys, there are people who are going to be going short here. I mean, big people putting the stop above there. There are people who are going to be seeing this breaking market structure here, right, and saying this is a resistance, right, from this point coming down here. So they say, oh, market is breaking here. You see, it broke the market structure. They say this is a resistance, and they trade here. Put your stop right above there. So there are buy side liquidity right there. So if you don't believe me, there's no problem, but I would say it anyway. The market is being manipulated. All right, so there's buy side liquidity right there, and the market maker need those buy side liquidity to balance up the marketplace. All right, deeper understanding when you lay your hands on the 4S training. So we see the liquidity taking, and then the market goes up to fill in the market gap. Okay, again, if you have your hands on the 4S strategy or the 4S training, you should be able to understand the concept. It is basically the same thing over and over again. So this green line up above there is my key level, which I'm expecting markets to get to and react from. All right, and this one here, I'm looking at that to be a kind of draw for price, because sitting below here, this is an equal low. Sitting below here is going to be most likely is the sell side liquidities. People who went long are going to push the stops below there. You get the point? So, but the setup was spotted on this higher time frame. On the higher time frame, basically, the setup was spotted, but I'm not going to be looking to take the trade on the higher time frame. I told you price behavior happens all the time frame. So if you have a good price behavior strategy or price behavior concept, it should play out on all time frames. So whether you're looking at the 1 hour, whether you're looking at the 1 minute, whether you're looking on the 240 minutes, whether you're looking on the 15 minutes or the 20 minutes, whatever it is, it is always the same. All right, price behavior is always the same on across the time frames. So it makes a lot of sense that when you're trading price behavior, you want to look for setups on the higher time frame, because when price reacts, you get significant movements that you can take advantage of. Whereas if you're looking for this setup can happen on the 1 minute, but this move to the downside would not be quite significant to put money in your pocket. But if you have this setup happening on the daily time frame or the 4-hour time frame or higher time frames than that, it it becomes more significant. A little movement on those time frames becomes really significant. So when you see the setups on the higher time frames, you now know that from that point you have a bias for a certain direction in price. So this whole setup was framed up on the higher time frame, and so going down to the small time frame, let me show you some things, interesting things here, guys. So now this is the same market right there. It's the same stuff, the same market. All right, so this was the level of the liquidity we talked about. So the market has come punched it and it's gone right through it. Now pay attention to these, guys. You see the market made an equal highs right here, 1 and 2. The people's eyes are going to be on that, right? It's going to be on that. So the moment that sitting above there basically is going to be some short-term buy-side liquidity. So there's going to be willing liquidity right there and unwilling liquidity. All right, unwilling liquidity basically is when people go short, they put the stop right there. That's the liquidity for the market makers, so they can punch through that. The people are not willing they're not willing to lose any money, right? Basically, so they're not willing to provide liquidity in the marketplace, so they put the stops right there and they're trading to the downside. But the market will come once it activates that. Their stop loss orders sitting above there becomes a buy side liquidity, right? So that is the willing liquidity. That's the unwilling liquidity rather. When it comes to the willing liquidity, you see that now we have an equal high, then the market breaks out. All right, the market breaks out. The moment it breaks out, and it's funny though, but a lot of people trade that way. The market breaks out of that range, and people are going to be chasing price, especially when they see this kind of movement, right? They're going to be chasing price. They buy, putting their stops where? If you're buying up here, where will your stop be? Below there. Now, that buying creates winning liquidity in the marketplace. So if the market makers are looking to match up large sell orders with the buy side liquidity, this is basically concepts that they use. All right, so you buy here, your stops are going to be under there and stuff like that. All right, so there were buy side liquidity, willing and unwilling buy side liquidity made available right there, and the market moved up to trade into a market gap, guys. Basically, that's what it is. So all that setup, when this was happening, we just sat in our hands and this whole thing made it even more beautiful to take this trade to the downside. But because we know that the market makers have achieved exactly what they needed when this breaker happened, and so they be looking, there's a high probability that, okay, they may just take the price down even very instantly. All right, this concept is all based upon the 4x plus training. It's all based around that. So when you get your hands on that, it's very easy to understand. So now look at this. Those of you who say you don't understand the play of market structure and stuff, the reason why I'm a little bit I don't talk much on market structures is you need to have a reference point before you talk about market structure. Just like when you're building a structure, a house, you need to have a foundation for it. All right, so if you're just basically going to be trading high highs and high lows, what are you trading into? That's the question, guys. So if I'm going to be trading market structure, I know that, okay, from this point, I'm going to be trading down because the market has done all of this work to at the left side, and we've gotten to a level where the market is now willing to go down. And so trading market structure in this case becomes really easy. So basically you can see there was support here. It looked as though it turned resistance there, but it's not really resistance that they were looking for. There was something in and around here that the market was looking to trade into. Okay, so but any which ways, those of you who say you don't understand much about the movement up and down. So you see, market was coming into the level, making higher highs, higher lows. So impulsive move high, correction move down. Impulsive move high, correction move down. Impulsive move up, impulsive move up rather, correction move down. Impulsive move, correction move. Impulsive move, correction move. Impulsive move. That is how the market moves when in an uptrend. It makes impulse leg up, correction down, impulse leg up, correction down. All right, then impulse leg up. All right, so that's where we have an uptrend right here going into the structure. So now I'm looking to trim my risk because this whole business of trading is all about managing your risk. Okay, so now you see the market come up there to that level and traded down, breaking this market structure right here. Now, this is a very good one. The reason why I had confidence that, okay, when this market structure breaks right here, the market is poised to go down, was simply because, okay, the market had already set up in this way. We've gotten to a level right there. So that reference point showed me that, okay, when this market break here, I knew that then the market was truly willing to go down. So any move up like this was just maybe a manipulation leg or whatever accumulating. Okay. So, and that was what sponsored the entries you see in and around this level. So the market retraced back up, came down, bounced up, right there, then begin to give up the ghost. All right. So, like I said, guys, right, resting below here are going to be what? The sell side liquidities. All of these resting below there. And these are good things for the market to balance up moves. Okay? So you see, in one move, the market came down and this was the initial stop loss for people who went long here. This was the initial stop loss point. And then you have these lows, relatively equal lows. Then you have these lows. All of that has been taken. You can see where price is trading at. And for me, I'm looking, that's why I have my levels right there. I'm looking for the market to trade to that point. It doesn't mean that he has to do that. He could trade to this point and retrace back, whatever. But the most important thing is that you have a reference point. Then you understand a little bit about market structure that, okay, higher highs, higher lows means uptrend. Lower highs means a downtrend. And when the market is reversing, it breaks the let's say it's reversing down, and so it breaks the lows and creates lower highs as it's coming down. If it's reversing up, it breaks the highs of at the other side and begin to create higher highs and your lows as it's going up. And basically that's what you have here. The market is just selling to the downside. Okay, pretty nice one playing out. Okay, and so if you don't understand this and you just need more details, those of you who got my 4S, this is a privilege that only those who got my 4S strategy will be able to enjoy. So if you want to really understand a little bit more, you want more details, like private stuff, you can chat me up on my Telegram. Okay, that's only for those who got my 4S. This is a privilege for the 4S guys. So you can chat me up and I'll give you stuff that will clear this whole concept up for you. It is a pretty easy, straight stuff when you know how to do analysis, and that's it, guys. That's it. Okay? So combining the market structure with you need a reference point to combine market structure to. Okay, because your reference point now becomes your foundation. You need a foundation, then you need to now look at your structure. Just like you're building a house, if you're a good builder. I'm in the building industry as well. So you need a foundation, and because if your foundation is not, you heard what the Bible said. If the foundation be destroyed, what shall the righteous do? All right. So if the foundation is not solid, then the whole house will collapse, and you've gotten into a deep risk, a deep problem, a deep financial loss. That is why a lot of people lose money in trading. They don't understand building. Sorry. But that's just for that, okay. But basically that's what it is. You need a reference point before you talk about considering the market structure. But guys, it is not about support and resistance happening right here. So you can see how this was support, right? This was support initially. Then you should expect price to come back and make a resistance. Now, when it came back the first time, people would have taken that and said, okay, it's breaking down. It's going back down. Either here or this one. This is going back down. That's resistance. Remember the trend continuation pattern I taught you for the market makers? This is it playing out right here, guys. Okay? So you can see that initially the market pulled up into the resistance, the support to the left, which now become resistance, and the market begins to trade down. Who is going to be taking that? When they take that trade, where would they put the stop loss? Right above the high. The market comes back, clears that up, and moves away. Moves away. It moves away. All right? The concept that I give you here, guys, they are powerful. This is also something you can look for. You can see, can you see the 3-bar pattern that I just shared recently? So if you not watched that video yet, you can go get that. So you see the 3-bar pattern playing out here and here. It plays out almost everywhere, guys. You know, this stuff. But like I said, you need to use that in the context of, in the context of either a trend or a reversal. And when you're talking about a reversal, you need a structure, you need a reference point first, you know. And then when you're talking about trend continuation, you need to understand, first of all, the reference point, then the structure as it is going down or going up. Then you can look for your entries. All right, so it's a very short one, guys. And I'm still expecting the market to, this is how it looks like on the 1 hour. Still expecting the market to come down to that point right there. Okay, this is what it looks like on the 4-hour chart. So the trade was up there, taken on the lower time frame, and expecting this lows to be cleared, where we have this equal lows, right, sitting down there. All right, I hope this one added something to you. At least it gave something to chew on, give you something to think about when you are considering the issue about price action and market structure. I give you things here that it's very difficult for you to get elsewhere, and you can't even get half of it for free. All right, so I gave you a point that, okay, you need a reference point first of all before you begin to consider market structure. Right, you begin to consider market structure. You need that reference point. If you don't have the reference point, a market is going up. I want you to look at price as an attempt to raise structures, to build structures, to make structures. So any attempt to build a structure without a correct reference point, you know it's going to fail. All right, so take for instance, this was a reference point. This to the left, okay, was a reference point. The market comes right there and did a very fantastic move here. So you see, and they took out the lows, liquidity. They took out the lows. So those who first of all went in thinking that, okay, the market is moving up, they came, cleared their stops right there, and before moving up. That is a solid foundation for market to move. Okay, you may understand how the concept, guys, but I tell you, that's a solid foundation for market to move. It happened in and around here, but I'm not looking to the left. So, but it happened in and around here for somebody to take an advantage of this little movement to the downside, especially from this point to the downside. You may not be able to capture up there, but you should have been able to capture from here down to this point. But then you see from here, market began to build. Resistance, broken, becomes support, broken, and it just continued to go up till it got to this point. So if your reference point, guys, is not something that the market obeys, you are in for a shock. So your reference point has to be something that the market truly obeys, and you want to look for a reference point in the higher time frame. Okay, which is what we did here, and we looked for entries on a smaller time frame in order to trim our risk. This is a business of trimming your risk. That's why it's called risk to reward, not reward to risk. A lot of people pay attention first of all to the reward, and that's why they get themselves smoked. You understand? So yeah, you need to pay attention first of all to the risk. So that's why I usually look for, when you look for the setup on higher time frame, you come to the lower time frame to trim your risk and all of that. But you are trimming your risk, but you're not trimming the reward in a sense. You are trimming your risk, but not trimming your reward. Your reward remains the same, but trimming your risk. So it's a business of managing the risk. Okay, so your risk to reward ratio becomes larger. It becomes difficult for the market to take you out. All right, so that's for it, guys. So the 4S strategies, those who got my 4S concept, if you don't understand, I have a very big heart. There are people out there who give you strategies and even not good strategies based indicators, and when you chat them up, they won't answer you again. Okay, they will not answer you again, whether you understand it or not. That's it. They just leave you. All right, they just let you go like that. They're not after you understanding the concept. They're after the money in your pocket. They're after the money in your pocket. So it is what it is, guys. I'm always here. Always here. Anybody who got my first strategy will testify to the fact that I am not going to leave them alone. All right, until they find their way through price. That is it. It is not a mentorship program, okay? Which is what makes it amazing. It is not a mentorship program. Had it been a mentorship program, then it's understandable. All right, but right now, guys, let me announce officially. I've increased the price of the 4S strategy by 50%, and so anybody who initially placed an order, you'll be getting a refund of your money. Or if you're placing your order, even as I'm saying this, you'll be getting a refund of your money. Okay? You get your money back and all of that. So it's just up by 50%. All right? We're already giving refunds out already there. Okay? So it's up by 50%, but it is still in the range of discount, basically. It is still in the range of discount. Why? Because of the immense value in it. I tell you guys, prior to this time, before now, when I look all these things, I only see lines. But I'm looking to the same chart. You look into the same chart. Everybody's looking to the same chart. John in Malaysia is looking to the same chart. Johnny in US is looking to the same chart. Here in Nigeria, we're looking to the same chart. But we are seeing different things. Some look at this using an indicator. Some look at this using trend lines. This is what I shared. When you draw your trend line here, you see that it matched up. Right? But where would you be getting to the trade? So there are things happening that sets up the market, the chart, in a way that you cannot draw a trend line. When you draw a trend line, that is a point for the market makers to come and slaughter you. All right. I'll soon be going, okay? So, well, that's what it is, guys. Before now, I was seeing lines. But with the concept right now, I could see and understand, not just seeing, but understanding what is happening. By wisdom, a house is built, but by understanding, that house is established. By wisdom, you can get certain results, but by understanding, your result becomes consistent.
So hello guys, this is the same trade that I talked about, and if you remember, I said that price was going to get to this lows. That was the level that I got my eyes on. And if you remember what I said the first thing that you need for a trade is that you need to have a reference point. Okay, you need to have a reference point, and you can only get a reference point from the higher time frame. All right. I'm sorry for the noises that you may be hearing at the background, but You can see that I'm no longer in the trade because I took the trade out when price came to these very lows. But I was still thinking that the price was going to get down to those lows. So you saw that was why I drew my lines right there, because I was thinking that okay, the market is going to come down, take the other side of the liquidity that's resting below there, right? So, like I said, guys, the very first thing is you need a reference point. Your reference point is like a foundation, and you can get that on your higher time frame. That is where you can now, after your reference point, you can come down to lower time frame to now build on the structures. So you can see this is the 30 minute. Let me take you to the 15 minute, guys. Now you can see here there were different opportunities for you to have entered a trade going down. So this is the only time that your structures would make sense. It would make sense trading structures after you've gotten your bias, your reference point. Okay. So we played that really nicely, guys. All this stuff, when you really master the forex plus, this is the kind of things that you can do. You understand? This is the kind of things that you will be able to do. All right. So you know how to get me again, guys. On Telegram, link is shown on the description below. I love you. Cheers and God bless you all.